Welcome back to this Moneycontrol live stream. You're watching Closing Bell on Moneycontrol with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, the trend of markets recovering in the second half of the session continues, given the fact that we ended at the high point of the day. In fact, the Nifty also reclaiming that 19,450 mark. If you look at the broader end of the markets, the Nifty Midcap index also managed to end in the green, and the Nifty Smallcap index gained somewhere around 0.6%, clearly outperforming its larger peers. Among the sectoral movers, you had the IT pack, the Realty pack that did pretty well. And aside of that, if you look at the metal pack, that was among the sectoral losers. In fact, it's a third straight day of declines for the Nifty metal index. Banks were also under pressure, even though the Nifty bank managed to come off the day's low. Aside of that, if you look at the advanced decline ratio, that was in favor of the gainers, in fact, throughout the day. Among the Nifty gainers, you had the likes of UltraTech Cement, Apollo Hospital, NTPC, Tata Motors. Mind you, the Nifty Auto Index has also snapped out of a 3-day losing streak, and M&M and Tata Motors were among the gainers. And Infosys, of course, has won a large order, and because of that, the stock was up and about, and in fact, it kind of cheered sentiment for other IT stocks as well. The likes of HDFC Life, Wipro, they were up in the session today. Aside of that, on the losing end, you had metal names. As I mentioned, metal pack wasn't doing all that well. Tata Steel, Adani Ports, Bharti Airtel, Hindalco, HDFC Life among the top losers. Of course, Infosys has gained on the back of a $1.6 billion order win from Liberty Global, and Indigo, of course, saw some bit of losses coming in 3% or thereabouts after a mega block deal, in fact, which saw the Gangwal family sell stake. But let's talk about the mid-cap end of the markets. Yatin, what's happening out there?
So today, there was some bit of selling which came in for the mid-cap stocks in the first half. Second half, there was a lot of stock-specific action. Now, if you look at today's advanced decline ratio, that again was almost 1:2. Clearly indicating that even today there was some bit of selling in the mid-cap indices. If you look at the mid-cap index, it was almost flat. However, small-cap index was gaining almost 0.6%. Today, we had a very good listing for SBFC. This is, NBFC which got listed today at a 61% premium to the issue price of 57 rupees per share. And that 57 rupees per share issue listed at 92 rupees. Now, if you look at defense stocks, they were in focus, be it GRSC, Kochi Shipyard, all of these stocks, Mazgaon Dock gaining anywhere between 10 to 20%. Also, we had the cabinet today, which is likely to approve a e-buses scheme worth 65,000 crore rupees, in which the government of India would be contributing 20,000 crores. My reporter Lakshman Roy had the details, which is exclusively shared with the viewers of CNBC Awaaz. Obviously, after this news bit, we had the likes of JBM Auto and Olectra gaining by nearly 10%, and also Ashok Leyland and Tata Motors. Both of these stocks closed at the day's high. What was not doing well post results is Uflex and Hindustan Copper. Uflex reported a surprise loss, whereas Hindustan Copper, we saw a decline on a year-on-year basis when it comes to the profitability as well as the EBITDA. Crompton and Indus Tower were the other stocks which were losing on the F&O side, and quite clearly the result reactions more or less have been done. And Nandita, we are moving on from the result season which concluded, and now probably the market is taking higher cues from the global markets.
Right, global markets, and of course the macroeconomic data as well, Yatin, given the fact that we saw inflation data overshooting analyst expectations as well. But aside of that, let's talk about the stocks that are on our radar this afternoon, starting with Indigo. This stock was down somewhere around 4% or thereabouts. In fact, it was down more than that in the earlier part of the session, but it ended lower by about 3.5%. There was a block deal in the counter today, 5.1% equity changed hands at the rate of 2,430 rupees a share. The entire stake sale the block deal was worth 4,800 crore rupees or thereabouts. The Gangwal family is believed to have sold stake somewhere around 4% or thereabouts according to the term sheet. Remember, Gangwal family as of June quarter held somewhere around 29.7% stake in Indigo, right, Interglobe rather. And post this stake sale, the stake will come down to somewhere around 26% or thereabouts. Now, in September of last year, Gangwal family had sold somewhere around 2.8% stake in the airline for somewhere around 2,000 crore rupees. And again in February this year, they had sold another 4% stake worth 2,900 crore rupees. So this is the third stake sale really by promoters. And back in February 2022, Rakesh Gangwal had stepped down from the board and had said that they will be reducing their stake in the airline, and which is why we've seen the third stake sale happen, and there could be more to come in the future as well. If you look at the stock performance over the last 6 months, it's up somewhere around 30%, but over the last 1 month, Yatin, the stock is down somewhere around 8% or thereabouts after it reported great set of numbers. Net profit was at its highest ever, over 3,000 crore rupees or thereabouts. But it's the concerns of high, high crude prices and of course higher competition and lower yields. All these combinations were the key risks that brokerage houses saw, but they had still maintained their positive view on the stock on a longer term basis. Going forward, brokerages had already said that promoter stake sale could be an overhang for the stock, and second, they are not really confident whether or not the airline will continue to replicate the first quarter performance earnings wise in the second quarter as well. In fact, second quarter is expected to be a little soft for Indigo, but third quarter onwards it could again pick up, given the fact that you have World Cup and all those events coming up. So all in all, brokerages are a little circumspect in the near term, but longer term perspective on the stock has been fairly bullish when it comes to the street.
Absolutely, and the crude prices and the way ATF prices have moved on the higher side probably garnered some bit of correction in the stock of Indigo any which ways, apart from the impact that we saw because of the block deal today. But what's doing well on the Dalal Street is the likes of pharma stocks, and Aurobindo, one of the top gaining pharma stocks for the year to date basis. Now Bank of America Merrill Lynch has a buy rating on this one. They've raised the target price by almost 200 rupees to a new target price of 965. Bank of America Merrill Lynch believes that both European and American sales have been much better than the street expectations. Obviously, there is some bit of moderation in the gross margins, but the US momentum is expected to continue because of three factors. One is stable pricing, third is the launch pipeline, and also the kind of traction that the management is already seeing in terms of witnessing some good demand, because there was some pricing pressure, but because of certain drug shortages, there was some support which came in for the drug pricing regime in the US, which is quite important for the Indian generic makers. So Aurobindo Pharma, this is one stock which is hitting a fresh 52-week high in trade for quite some time now, multi-year highs for that stock, and clearly the guidance of the management with regards to the growth in the second half and full FY24 was encouraging, because of which the stock also had some bit of momentum in a weak market like today.
Right, Yatin, pharma stocks of course have been doing extremely well after a very tepid first half, and you've seen stocks like Cipla, Dr. Reddy's all hitting fresh 52-week highs as well. But on that note, the second stock on my list today is JSW Energy. Now this stock is up over 20% in just a matter of a week. GQG Partners has picked up stake worth over 400 crore rupees in the counter. In fact, they have bought somewhere around 1.19 crore shares or 0.72% stake at a price of 345 rupees per share. The stock was up 6% in today's session. But if you look at the past performance, the first quarter earnings weren't all that good. It saw a 48% drop in net profit for the first quarter, which is why Citi and CLSA both had sell rating on the stock. But off late we have seen Antique Stockbroking recently upgrade the stock to buy. You had Jefferies that had said that JSW Energy is among the top picks, its top picks in the power space as well. And I think if you look at the YTD performance or 6-month performance, it's up somewhere around 64%. But the reason why it could be up 20% in the last 1 week was that at least I think the street would have already had a whip that GQG Partners would be interested in buying a stake in the counter. Remember, GQG Partners is the one that had bought stake in Adani Group of shares, and that had revived confidence in those shares after the Hindenburg report had come out in January. So all in all, it's a very renowned investment firm, GQG. So a stake buy by that has further fueled positive sentiment on JSW Energy.
In fact, today CNBC TV18 was also reporting there were large deals in Adani Power also, in which the promoters might have sold. Obviously, they reported that a large fund house might have bought. Given the fact that GQG has already bought power stocks like JSW Energy, it will be important to watch if they really bought Adani Power also in trade today. Obviously, it's speculation, but we'll wait for the bulk deal data which is likely to be coming post 6 p.m. today for the Bombay Stock Exchange. Now, the other stock which is on our radar is Vodafone Idea. Now, a whole host of retail investors have been buying shares of Vodafone. They have been not been able to really turn around this investment. In fact, most of the investors who bought shares of Vodafone Idea are suffering huge losses. Now, UBS has a neutral rating on the stock with a target of 7 rupees 70 paise. In the first quarter, the market share dropped. Losses also moved higher. If you look at the ARPU, there was no big recovery as per the market expectations. In fact, UBS says that the revenue was in line with expectations, up 3% quarter on quarter, with ARPUs coming in at 139. Remember, Bharti and Jio's ARPUs are close to 190, 200, kind of range for quite some time. But clearly Vodafone has not been able to inch up their average revenue per user. In fact, the EBITDA was 7% below estimates as per UBS, given the fact that the higher subscriber acquisition and servicing costs have been weighing on the overall cost structure. Also, the net loss came in at a whopping 7,800 crores for Vodafone Idea. So, probably if you are a retail investor, stay neutral. Probably do not try and bottom fish the stock, because till the time there is no clarity on the funding or the equity infusion, capital infusion by the promoters or external investors, clearly this stock has nothing more to do except for posting losses every quarter.
Well, and of course, there are concerns of a duopolistic, situation panning out where the telecom space is concerned. But with that, we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below. And of course, we'll be back with the markets at 8:30 a.m. tomorrow. So don't forget to tune in. But for now, it's a goodbye from us. For all your other news and updates, stay tuned to Moneycontrol.